Hey there, Sank, everybody. Welcome back for another amazing video. Today, we're going to be talking about algorithmic trading. Okay? And what I mean by that is we're going to be talking about black boxes versus human decision making and the difference between this and which way is the best way. So without any further ado, let's get this video started. So let's start off with black box. What is black box? Black box is a algorithmic based trading system which has a lot of AI systems involved, which has a lot of these very stringent tests involved. And what this bot does, it's a bot. It's a box that is in a bot. So it's a bot that is in a box that does the trading, and it does it on basis of arbitrage and does it on very small time span based trading. For example, there's moments when in the stock market where there's a lot of arbitrage opportunity, meaning is a penny based arbitrage opportunity. So what this black box does is it quickly finds these through the algorithms, and then it quickly makes that trade happen and profits off of these 1 cents. And it does it in milliseconds all across multiple black boxes. But there's also black boxes that make decisions for long-term trading. They're just bots. They will just decide, okay, this is a swing trade, this is a day trade, this is a month trade, this is a year trade, this is blah blah blah. So these bots. But then there's the human side, which is like a human sits and he trades. Which way is a better way? So black boxes, you have to understand, they work off of these usually these arbitrage formats. This arbitrage triangle when it comes to forex, but when it comes to stocks, they also look for arbitrage opportunities where they can make quick transactions or quick movement transactions and profit from. Right now, there's not a lot of great black boxes for the crypto market, but there is a lot coming, because without these, the markets will have a lot of arbitrage opportunity for humans to take advantage of. But as soon as these are developed, humans cannot take advantage of it, because these will equalize the markets very quickly. So there's no arbitrage. For example, if there's a way to make money from one angle, a bot will come up and make this equalize. So then they make the profit from that little gap. But then because it's equalized, you can't really make any money from it anymore. Or B, if they're doing, now this is the other side, if they do swing trading. So black box usually are like a emotionless human that is only looking at data and making decisions from it. There were reports of the greatest traders on the planet that have ever lived are people who are like that, who are practical, algorithmic based traders. Very fundamental, technical, blah, blah, blah. They look at data, they look at numbers, they make a sense, trade. Okay, that's great if the market's in a cyclical format where it can determine the structures of it going up or down or however it is. They can find the patterns, they can find the data of making sense of it. Unfortunately, we've been through some recent times where there's a lot of, I would say, non-quantifiable, rather qualitative things that have happened that can alter your decisions. For example, Elon Musk coming up and saying something, or B, the COVID market, whatever, what happened in COVID. See, Luna crashed all of a sudden. How does that affect the stock market? Crypto crash. So these things haven't been built fully yet. So it requires a human sometimes to be able to make decisions on this and profit from this. So I would say if you're investing in the long run, a human decision making will be better. But if you're just trying to make short-term profits, then a black box would be better. And if the market's in a cyclical format, which it can actually calculate, then the black box would be better. But unfortunately, you can't afford it. Black boxes are very expensive. They're usually banks afford these. I think JP Morgan, RBC, big banks are the ones that currently own these things. So that leaves you to you. How do you differ from it as a human? So you have the capability of understanding where, as a whole, where the economies are moving, right? For example, every single government has agreed to Paris agreements, 2025, 2026, 2030, electric cars. What do you do from that information? Okay, which industries are going to be produced by this? Let's invest into those startups or penny stocks or those small cap stocks or mid cap stocks. So that when they become big cap stocks in 6 years, I made that's 5x, that's 6x, that 10x. So things like this. A black box won't really be able to make those decisions because that requires a lot of data, and future industry data hasn't really been developed. So you can make those decisions and you can invest in the long run. You can also still do day trading against the black boxes, which is difficult. But if you got your style, you got your formats, you got your trends understanding, and you understand yourself, well, guess what? You're going to be the 5% winner, and the 95% who are losers are losers. So I hope you guys like this video, but I highly recommend check out what black boxes are, what algorithmic trading is, what bot trading is when it comes to stock market, but and then also what comes to the crypto market and how it's still not really fully functioned and fully produced for the crypto market, but it will become very quickly because crypto markets are more in line with it. There's easier technology that can be added on top as an API, and you can quickly do it and you can make a lot of profits from it. Hope you guys like this video. Take care of yourself. Assalamu alaikum. Subscribe, like, share, hit that bell icon for notifications. Follow me on TikTok and Instagram for more content. I'll be uploading more stuff in all of these social media websites. Thanks. Take care. Salam.